Rich people are known for making their money in businesses, in real estate, and once they've taken the calculated risks and have built it, then they want to be safe. So where do they put their money? Historically, they put their money in the stock market. They don't want high risk. They want to produce a consistent return. And yet, with the behavior of the stock market in the recent years, the rich have started pulling their money out of the stock market, and they're putting it somewhere very interesting.
One shot, now the future is yours. Go!
You know, when I started building all of my wealth through the game of real estate, it provided such huge tax advantages that ultimately I didn't really need to pay taxes. I had income from my job that was growing year over year, but my portfolio was growing, and every house that I bought gave me depreciation that kind of canceled out my taxes. And so for the first many years, even when I was a multimillionaire, I still didn't need to pay taxes. And I thought, wow, this is kind of cool. But over time, my wealth grew a lot bigger, and I built a much bigger portfolio, and I started producing revenue from a lot of other companies. And it got to the point where I started to pay millions of dollars in taxes. And I'm just going to tell you right now that when you're paying $50,000 in taxes, when you're paying a couple $100,000 in taxes, you can talk to your CPA and they can tap into kind of the traditional tax benefits. You know, for business owners, there's over 250 different tax write-offs. And so it's like, you can use that to mitigate some of the taxes. You don't have to pay the tax man as much. But when you start paying millions in taxes, that doesn't work anymore. Your CPA is no longer your friend. They actually don't know how to help you. And the question is, where do you go for help? Well, I had to discover a brand new term that I'm going to teach you today. It's called a family office. And I joined up with a fractional family office. Let me tell you what this is. A family office is a private wealth management advisory firm that caters to ultra high net worth individuals. Unlike traditional wealth management firms, family offices provide a comprehensive solution for managing the financial and investment needs of affluent individuals or families. In other words, I want you to think it's like I sold one of my companies and I made $20 million and I'm going to have a massive tax bill, but more importantly, I got my money. Like, what should I do with it? Should I just be conservative or maybe even lazy and put it into the stock market like a lot of them used to do? Well, check this out. Family offices offer a broad spectrum of private wealth management services, including financial planning, investment management, budgeting, insurance, charitable giving advice, wealth transfer planning, tax services, and a whole lot more. So ultimately, the family office is a collection of a bunch of lawyers, financial tax strategists, financial planners, wealth advisory people. You got all of these individuals, and what they're doing is they're like, well, we're looking at alternative investments, we're reviewing the pitch decks, we're investigating the companies, we're also needing to move your money around in all these different ways to save you on taxes. So Mr. Krohn, you're not paying millions of dollars in taxes. We're going to mitigate that so you're only maybe paying $500,000. And that's ultimately what I found when I joined up with a fractional family office with Jim Do, is that first year, he helped me save a ton of money in taxes. And I've been with him ever since because my CPA cannot actually do what a family office does. Now, one of the most important things that a family office does is they manage private equity opportunities. So when we talk about the stock market, we're talking about publicly traded companies. Publicly traded companies need to do all sorts of excess reporting to make sure that they're accurately telling you about their financials and what's happening, because if they don't, they can go to jail. So in other words, they have very strict requirements that they need to abide by. When we talk about private equity or private companies, they're not publicly traded. And so it's kind of tricky because they're kind of pre-IPO. They're pre-stock market often. These are companies that might be the next big thing. They might like zoom through the roof, but because they're not publicly traded, they're scrutinized a whole lot more. And there's two really different types of investing out there. You have those that invest in the stock market, and what you're basically doing often is investing in the top 500 successful companies, the top largest companies. These blue chip companies, they once were nothing. They zoomed through the roof. They had their meteoric rise, and now they've plateaued. And when you take a look at the 30-year average on the S&P, which is taking a look at the top 500 companies, they're basically saying, yeah, they average 8 to 10% year over year over year. And so you're like, okay, if I'm a wealthy person, I sold all of my stuff, I made grundles of money, and now I wanted to put it in the stock market, and I hope that my portfolio grows an average of 8 or 10% a year. But the stock market is also really volatile. And that means that it has good years and bad years. One year it might go up 18%, one year it might come down 30%. And so if you're trying to time the market, nobody can do it. It's nearly impossible. And it creates a lot of frustration when it's like, hey, I had $1 million and I had a heavy allocation of the stock market and I lost $10 million this year because I was being lazy or kind of doing what I was told was conservative, when it really is a 30-year game for maybe hitting that 8%. And most mutual funds, even the 401k over the last 20 years, is averaging 4.25%. IRAs, 6%. 5%. So when you start averaging it out, it's very difficult if you have a lot of money to not gain, but sometimes lose a ton when all you're trying to do is keep it safe. Moving into the private equity sector is really what today's video is about, because wealthy families, family offices, instead of putting their money just in the stock market, they are now trending for the first time historically ever in moving their money into the private sector. Now, I got to pause and tell you that private equity plays are some of my favorite plays. You may know me online as like the real estate guy, right? Like Kris has done thousands of deals, a couple $1 billion worth of real estate. And while that's true, real estate produces a very steady 25, 35, 40% per annum. Getting my money to compound and double every other year, that's a reality with the way I invest in real estate. But you don't want to put all your eggs in one basket either. And so it begs the difference of like, where else do you put your money? Real estate for me is actually quite conservative. So I like to put my money there, but then I turn to private equity when I'm looking for way bigger upside. In fact, we call this type of investing high asymmetric risk investing. We're basically saying, hey, it's 2014. There's this company that's just kind of, taking root. It's called Tesla. And it actually also just barely hit the stock market. I'm going to throw $1,000 in there. The dude, Musk, whoever he is, it's kind of a pipe dream, right? I'm like, you're really going to put electrical charging plants across the country and you think that you're going to manufacture the largest EV company out there? It's kind of a pipe dream. But you fast forward 9 years and that $1,000 today is worth $1.7 million. Well, that started as anyone would consider a private equity play. Or maybe you've heard of a little company called Netflix, right? They took down Blockbuster. They basically said, don't go to a storefront to get a video. We'll actually send you a DVD in the mail, just line up and then we'll give you some online access. Well, had you put $1,000 in 2013 in Netflix, today it'd be worth over $250,000. What happened during that period of time? That company took off. And even now, while they're publicly traded, at one point they weren't. So we're talking about asymmetric risk means very low downside. Like I put $1,000 into Tesla. What's the worst that could happen? I lose $1,000. What's the best thing that could happen? My $1,000 could turn into $1.7 million. In other words, really high upside. It means that the downside and the upside aren't equal. High asymmetric risk investing is where you're taking calculated risks in private equity plays where you're looking for massive upside and the downside is also minimized. And if you can find a way to diversify your money into 10 of these different companies or 20 of these different companies, what we're finding right now and what CNBC is reporting is that family offices are actually finding more comfort, more growth, more upside in that particular strategy. CNBC said family offices now have more of their money invested in private markets than public stock markets, even as the market rallies, according to the new survey. The survey spanned 330 single-family offices and private multifamily offices around the world, with 144 in North America. The family offices surveyed had an average of $1.3 billion in total wealth, including private businesses. So the survey in North America family offices conducted by Campton Wealth and RBC found that family offices had 29.2% of their investments in private plays versus 28.5% in the stock market. This has never happened before. Private equity basically is on the up, and stock market plays, they're definitely on the down. Part of me wonders if part of this has to do with the Fed's cutting rates, because historically speaking, when the Fed drops rates, guess what happens to your 401k, your IRA, your mutual funds? They go down. In fact, the stock market can take some significant hits, even drop as much as 20%, because a lot of consumers lose confidence when they see those rates drop. They like it for real estate, but it usually bodes very poorly for the stock market. Do I think we're going to have a good stock market year? Personally, I don't. I think 2024 is going to look a lot like 2020. And if you look back to 2020 and you owned real estate and you saw your equity rise $100,000, isn't there a part of you that was like, man, I wish I had that time machine. I'd go back to 2019, and if I could, I'd buy 10 houses, because if each of them goes up $100,000, that's $1 million. Now, the study goes on and has a few other interesting points as it looks to the future. They plan to concentrate even more heavily on private markets in the coming months, according to the survey, which found that 41% of family offices plan to boost their allocations into private equity. Only 23% plan to add to their developed market public stocks, while 15% plan to trim their stock holdings, according to the survey. Bottom line, when you look at it, the money is moving into private equity And why not? Like when you take a look at the dot-com bubble and now the last 20 years, we've seen through technology a lot of really exciting companies emerge. Real estate is what everyone thinks that I do, and that's because it happens every single day. But my cutting edge investments, they're actually not real estate, because real estate is a predictable machine of outcome for me. I've mechanized it, I've homogenized it. My results in real estate, they're very, very consistent. But private equity, the last several years, that game, well, that's what's been giving me some very extraordinary upside, and certainly some of the best gains that I've ever seen from any of my investments. As a financial influencer, I found a few years ago that I started stepping into some crazy deal flow because my inbox, which is public, started getting chalked up with over 2,000 opportunities a year where people would reach out every week and say, here's my company, we're small, we've got proof of concept, it's working. Kris, can we have some of your capital to help us scale? We'll give you some equity. Or, hey, can we take your social media and point it to our company because we think it will help it grow? And so there's a lot of reasons why people reach out to me saying, can we find a way to give you some equity to help grow our company? And so a few years ago I was serious and I built a team and I took the 2,000 inquiries that I was getting and had my team start vetting them down until by the end of the year I could take 2,000 plus opportunities and whittle it down to 10 companies, largely technology based, that have 4 to 7 year game plans for becoming a billion or a multi-billion dollar company. In other words, what they call a unicorn, a $3 billion company on up. And what I started doing was taking these 10 companies and I started finding capital for them. I started syndicating for them. I put my own money into them. But then on top of that, I would use my advisory board, the different CEOs and chief marketing experts and chief legal from my different companies, pulled them all together and said, okay, you guys, you're like the smartest people collectively in my entire empire. We're going to take on this new company. We're going to Shark Tank it. We're going to vote. We're going to see if we're going to take it on. And if we are, I'm going to give it a couple $1 million for scale. And then I want to give it your expertise. And then between that and the other resources that I could make available, we started basically helping these companies grow. My personal game plan is to select 10 companies every year for the next decade. So 10 companies a year times 10 years, that's $100 billion plus plays. And I want to see if I can beat private equity. Most of them select 10 companies and they're hoping that maybe 2 of them will take off to the moon. I want to see if I can maybe beat that number by a little bit, because a decade from now, 20 years from now, if I had some type of ownership with my investors in 10, 15, or 20 different companies that all like made it to the moon and back while the rest kind of stagnated, dropped a little bit in value, maybe grew a little bit, those few winners can absolutely make up for the losses on all the other companies and then so much more. Here's what's kind of crazy about this is this video I'm making for you is not about rich people. It's not about, hey, do you have a net worth of $100 million on up where you need to hire like a bunch of wealth management experts to help you figure out how to handle your taxes and where to put your money and how to vet opportunities? Well, I recognize that there's very few people that fall into that, and yet where so much of my wealth is growing right now is in the private equity space. So a lot of what I'm sharing with you is, number one, to educate you on what private equity is, and then number two, to let you know that there is deal flow out there. One of the things that I like to do is gather investors that, once you've allocated some money into real estate and you're saying, hey, I've got some excess capital, $100,000, $200,000 that might be sitting in a 401k or an IRA or might be sitting as equity in my home. And you know what? I want to be more intelligent with my money. I'm looking for calculated risks with a percentage of it that I can really help grow a lot. And there's a way for me to expose you to a number of those companies, including the ones that I'm participating in. Bottom line, if you have over $100,000 sitting in a 401k or IRA or maybe equity in your home and you're thinking, you know what? If 401ks and IRAs on the average are producing 5 or 6%, that means that with inflation sitting as it has been between 4 and 5%, means that my money isn't really growing. And with basic compounding over 20 years, it triples. In other words, what you hoped would be a multi-million dollar retirement ends up being a multi-$100,000 retirement. And that just doesn't work. By the time you retire, you're going to be spending $80,000 to $90,000 a year on your lifestyle. But if all you do is retire with a couple $100,000, you're basically going to have a couple, maybe 2-3 years worth of living, and then you're up a creek without a paddle. But if you get into some different diversification strategies, like what I do in real estate, where we move from single digits to double digits, but then even bigger, if you want to figure out how to get into triple digit and beyond ROIs, having some of your money sitting in private equity might be something you want to look at. Now, I have a very small private investors club where I take on groups of my real estate investors that want to go beyond real estate, and they're looking for the different private equity plays. And there's a place where we can talk and chat. If you have interest in learning more about this, I want you to click the link below, fill out the form to learn about my private equity companies that I'm investing in, and let's see if we have a match on building more wealth together. Now, Kris, why on earth would I care about what the wealthy are doing with their money? Well, I'll tell you why. When you do what wealthy people do, you get what wealthy people have. You know, there's so many people that are just stuck in this rat race where they're like, I don't know what to do with money. I wasn't educated. I'm not the master of money. So I'll just put my head down. I'll do my job. I'll throw my money into 401k IRA. I've been sold the dream that it'll be enough. But if you actually do the math, it's not going to be anywhere near what you need. Forbes says you need $3.1 million to retire on $100,000 a month in the form of an annuity that's just paying you that residually, which means that if you're going to retire with anything less than $3.1 million, you're going to retire with a lot less than $100,000, which means you could literally make $1 million and annuitize it and still retire under the poverty limit. Like, I want you to think about that and set that in for a second. That's why you should care, is looking to successful people, looking at their trends and looking what they're doing. If you do what they do, you get what they got. Kris, I don't got, $100,000 or millions of dollars. I don't know if private equity is the game I can play right now. Like, what if I got $5,000? Well, check it out. I started with nothing, and I've made a video right here that will show you a number of different ways that you can invest $5,000 and grow it successfully.